everyone. I hope you enjoyed the show so far. My name is Tikla Mbonge and I'm a senior analyst with research firm Omdia, and I'll be your moderator for this session. We're going to look into the fintech field, and more specifically, what are the next steps and trends in Africa's fintech revolution. I'm joined by Abdi Mohamed, CEO for Absa Bank of Tanzania. Good afternoon, Abdi.
Afternoon, Tekla. It's very good to be here.
Thank you. So before we kick off with our conversation, I would like us to look at some numbers that I have extracted from Omdia Research, actually. So I'm just going to share my screen. I hope you all can see it. And there we go. So basically, before we talk about fintech and mobile financial inclusion in Africa, it is important to look at where we come from or where the continents come from. So what we have basically is that we are on a continent where until now, or until recently, the level of banking penetration was still very low. We had, according to the World Bank, less than 40% of the population across the whole of sub-Saharan Africa with a bank account back in 2017. We can see obviously some differences from a country to another. If we just look at East Africa, the example we have here is East Africa with about 80% in Kenya, which is high on African standards. It's twice the average of sub-Saharan Africa. On the other hand, I have a mobile penetration rate which is not only constantly increasing, but also which is performing well. We are at about 80% of the population as at the end of 2021 with at least one SIM card. Although on global standard, it's still low because on global standard, we've exceeded 100%. On African standard, it's still a good performance compared to what we have in the banking penetration field. And our third metric is the penetration rate of mobile financial services or mobile money, as we can call it, as called a service as well. And we'll still have low penetration rates across the continent at around 20%. So that's just for sub-Saharan Africa. But obviously with some markets performing better than others, once again, we'll have better performances in East Africa. We're going to check with Abdi what are the reasons for this better performance, if I can say, in East Africa compared to lower penetration rates. If we look at on our left-hand side in countries such as Central African Republic, Madagascar, or Chad, or even Nigeria. Another metric as well, or other metrics that we've been looking at Omdia is segmentations. What do people use when they access mobile money or mobile payment services? So for the moment, these are data for 2021. We can see that airtime purchase and also P2P transfer, so that's money transfer to a third party, are the main usage, and followed by lending and savings. In terms of revenue, however, we can see that P2P transfer is among the top services, but e-commerce is also performing well in terms of revenue generator, followed by airtime purchase. Last set of data that I wanted to share was a bit of our forecast that we are still working on here at Omdia. So over the 5 years, 2021 to 2026, we will see the number of mobile financial services users nearly double to exceed 400 million in 2026. These numbers are thousands that you see. So it's 400 million for 2026, up from just above 200 million in 2021. In terms of segmentation, on the right-hand side, we can see that airtime and P2P transfer, as we said earlier on, are the main segment, but this is going to evolve from now to 2026, and we will see P2P transfer retaining a large portion, but also payments, and notably e-commerce, payment for e-commerce services, and also payments of utility bills gaining a larger share. So that's it for the data that I wanted to share with you. I'm back with Abdi, and we are going to start our conversations and look at what you think, Abdi, of the development of fintech in Africa from a banker's perspective, okay, a banker view of the journey, and where do banks like yours fit in the fintech landscape, and what does the future look like?
Thank you, Tekla, and some very, very important pieces of data that you have shared there. What that Omdia research shows is really aligned to our own view of the market and how it has developed over this period of time. I think historically, you will remember that banking and telco were very separate activities, and in banking, we pretty much had the brick and mortar, branches and ATMs, and that was our main interaction with the market. Customers walked into the branch, did their transactions. We used a lot of legacy systems that were pretty much standalone in those days. And the telcos were mainly state-owned and operated a fixed line, network, and a very limited mobile network. But what you have seen over the last few years is the growth, really exponential growth in terms of digitization, both from a banker's perspective, as well as what the telcos have been able to do with the M-Pesa and similar solutions in the region. And both have developed very well and provided our customers with better financial inclusion, better access to products. And along the way, it's been a very interesting relationship between the telcos and the banking sector, which initially started off as mainly competitive, but over time has developed into collaborative in some aspects where we believe that we can work together for the common good of the country, the economy, and for the common good of our customers as well. And so there's a lot more partnership in the last few years than we've had before. What has come in as an added aspect, over the last few years is the bigger role that fintechs are playing, in terms of creating the interaction between banks, telcos, and the various players in the payment ecosystem. You find that the fintechs come in and some of them provide good integration services, and they play a very, very vital role, especially in innovation. They are mainly smaller organizations, smaller entities, more nimble, more flexible, and both banks as well as the telcos have understood the important role that fintechs play. And you will see most large organizations today collaboratively working with fintechs, creating open APIs. A number of banks, including our own, are operating APIs that are available for innovation. Telcos as well, some of the large telcos in the region in East Africa are also, providing that open API environment, creating sandboxes that allow for testing, for innovation, and really transforming the overall payment ecosystem from one that is, dispersed with multiple solutions to an increasing convergence, towards solutions that are seamless, that are frictionless, that work for customers. A lot of progress has been made, but there is still a lot more to be done. And we face the common challenges of heavy investment in systems that are referred to generally as legacy systems that require massive investment to transform. And increasingly, people are looking at how to develop, interfaces and other systems that allow for better, innovation as we move forward. I think the point you made, Tekla, when you were presenting earlier about how the East African region is really moving ahead in terms of innovation is a very valid point, especially in terms of mobile payments. And I think, in my opinion, there are about two reasons for this adoption that is better than other regions. One is a timing issue. Safaricom M-Pesa, which was one of the earlier versions of it, happened in 2007. And therefore, to some extent, the region has had a good, 15 years plus of working with these solutions and developing them over time. And that's why when you look at the global map of innovation, the East Africa region is really one of the hotspots where quite a number of these initiatives are coming out of. I think the other reason is the regulatory aspect, and we've seen in all the three countries in East Africa and the surrounding Eastern Africa countries, regulators increasingly, coming to the party and supporting innovation, not just the banking regulators, but also regulators in the telco sector, regulators in insurance. And I feel that's part of the reason why the population has adopted. And maybe lastly, it's the age of the population. And I think this would apply to Africa as a continent, that because you are dealing increasingly with a younger population, the level of adoption is likely to be higher. So, that's a quick snapshot of the history of this. And today we are in a place where the banks, the telcos, the fintechs, all understand the need for collaboration and the need to work to disrupt together, because the continent is still largely cash-based. The cash transactions are still 90% plus. And that is what we need to deal with. And when you work together, I think the opportunity does exist to really create more digitization in the payment space.
Thank you, Abdi. Let's move on. So after this background information, to your thoughts about financial inclusion, micro SMEs, and fintech development as well. You mentioned actually that fintech play a vital role, especially for innovation in the region. But what are some of the positive developments in this space, and what are the issues that are still to be addressed?
Thank you, Tekla. So, micro businesses, SMEs, are the backbone, of Africa's economy. In fact, the global economy. There are very few economies in the world where the contribution of this sector to total employment is less than 50%. So it's a major sector of the economy. And there's been a lot of focus over the years in terms of how do we, create growth, create transformation in the SME sector, especially the micro businesses, which have traditionally been excluded from the financial sector. Regulators across the continent have prioritized this issue. And in Tanzania, where I'm based, the Bank of Tanzania has a framework, a 5-year framework for improving financial inclusion. And it's a key agenda item in terms of a discussion between the regulator and the banking industry. So it's an area that's important. There's a lot of alignment in terms of how we develop it as we move forward. But the key issues, that clients in this space have faced over time lack of awareness for banking products that exist, lack of access in a number of areas, especially rural-based agricultural customers have had, struggles around how to access banking services and products. Cost is another big issue, how to access these products at a cost that they can afford, etc. And all of these have ensured that over time, the growth of the sector has been impacted. Digitization of banking and innovation in general addresses the issue of access. By digitizing, by being able to deliver over a digital platform, you're able to reach a lot more customers, and you're able to access. They are able to access more products as well. And there's been quite a bit of work done that, especially in the East Africa region in the last few years. And I'll give you an example of a product ABSA has in Kenya called Timiza, which addresses how to provide credit, to this segment, and how to provide it quickly and at a cost that, they can afford. And it's a partnership between the bank, the telcos, Safaricom and the rest of the telcos, as well as some of the middleware providers. In Tanzania, where I'm based, we launched a product around September of last year, where we are partnering with Tigo, which is one of the major telcos in the country, and we are partnering with a middleware provider who is supporting us in terms of providing the lending software, the scorecards, etc., and using the data that sits with the telco, the data that sits with the bank, our own experience in being able to lend to customers, and leveraging on the flexibility of this fintech that is sitting in between. We've been able to have a successful launch and are getting to about 100,000 of this segment, 100,000 clients who are doing very well and are using the money to develop themselves, to develop their small businesses. Some of them are in the agriculture, agriculture sector and different sectors of the economy. So innovation, digitization, and transforming the way we engage this client base is going to increase the level of inclusion in the market. It's a journey, it's a long journey. There's a lot of training involved in terms of how to use the products. There is still not too much diversification. It's very much focused on the lending product, as it were. So we need to expand it to provide deposit services. We need to expand it to provide insurance, which is another very, very important product in this sector. But it's a start, and it's a far cry from where we were a few years ago, where these clients had absolutely no access to banking. So that's where we are on this, and I believe that for such an important sector, there will continue to be a lot of support from regulators, from policymakers as we move forward.
Thank you, Abdi. Now, another topic, moving on actually from the sector itself, that there are always disruptors coming to the market. The environment, is unfolding.
Thank you very much. I think on this subject of the cryptos and everything else that is going on here, there is a lot happening. People talk about cryptomania. Cryptomania. In Nigeria, I think some of the surveys there shows 1 in 3 people surveyed has had some interaction with the crypto market. The level of regulation is varied between different markets, but it's fair to say that the regulation is not yet fully caught up with where the activity in the market is. It ranges from markets where there is just no regulation and people are just operating in the crypto market without any regulation, to some areas where there has been negative comment from regulators saying that they do not support, crypto, to areas where, for example, the South African market, where there is some amount of regulation and support that has been issued to help drive the development of the crypto market, but in a way that is responsible, in a way that is safe, in a way that protects customers. I think the biggest concern regulators have expressed is on the issue of treating customers fairly, and just consumer protection as a whole, in terms of educating customers, clients being aware of the risk they take as they participate in the crypto market, and so on. In Tanzania, the regulator has included this in the agenda of discussion in a number of venues that I have participated in myself, and therefore it continues to interest the regulator. They want to see how it develops, and they want to regulate and support as it moves forward. So that is kind of a middle point that is going on here. There is the related subject of digital currencies, where the sovereign, the country, issues a digital currency that is no different from the existing currency that is managed in terms of supply by the central bank of that particular entity. And I know Nigeria has done it. A number of African markets are looking at digital currencies, and there is likely to be a bit more traction there from a regulatory perspective than the cryptos in the market that have a different trajectory. I think on this one, the overall message is it's a new area. It has the ups and the downs of it, the pros and cons, and it's going to be a continuous conversation as a whole.
Thank you. So moving on from digital currencies and cryptocurrencies, we're just going back to probably regulation matters. You tapped into what was on the agenda in Tanzania, and especially in terms of customer awareness around digital currencies and cryptocurrencies. But how, in general, how are policymakers and regulators keeping up with fintech innovation in Africa, and do you think that they can do better?
Thank you, Tekla. I think the volume of change has been quite high, and it's growing exponentially. That's one factor to think about, because the regulators are set up, for the market and in terms of what we are doing, but the level and the volume of change is very high. Another issue to think about is that some of the innovations cut across multiple regulators. For example, banks are moving away from being just banks to financial service providers. And therefore, there is increasingly banks participating in investment propositions, banks participating in insurance and issuing insurance products, as we do here in Tanzania, as ABSA does in Kenya, where you have a full-scale insurance proposition sitting within the bank. And so when you're looking at innovation and digitization of banking services, you are mostly dealing with multiple regulators, and that has an impact on speed. In some of the markets, the regulators themselves have come up with mechanisms where they work together and they look at products together as a college of regulators rather than as individually. And that improves the speed, somewhat. We've also seen regulators interested and supporting the sandbox approach, the API approach, where you test, you learn, and then you present, for regulation and for support. And increasingly, we have seen regulators taking the position that they would approve and review, set a date, approve and review together 1 year, 2 years down the road to see whether the product requires changes and things that need to be done. So I would say the regulators have been supportive, but increasingly the level of change and the level of innovation is also quite high. And therefore, there are instances where, the market almost, runs ahead and does the product, tests the product, and then brings it for regulation. It's a combination of the two, but I can tell you, certainly in Tanzania, and I've attended a number of forums that are run by the regulator. Just late last year, we had the Conference of Financial Institutions, which is chaired and run and owned by the Bank of Tanzania. And half of the agenda there was about innovation, digitization, financial inclusion, and how we can drive that forward. We had a whole session on cryptos where the governor of the Bank of Tanzania was there. There was a lot of discussion and debate about it. And so there is an openness, there is a readiness to listen and take in new ideas. And we need to keep working together, to move it forward.
Thank you, Abdi. So it's at least interesting to see that there is a level of or a will from the regulator, not only to collaborate, but also to that they come with an open mind. Okay, so that's the end of our session. Just a few points, key takeaway points actually that I have written down or noted from this conversation, especially in terms of better financial inclusion. So the relationship with the telcos, as you said, has evolved from a competitive one to a collaborative one. So there's more partnership happening, more partnerships to come as well. Fintech players play a vital role, especially in terms of innovation. Most of the players are smaller and therefore more flexible. And so it's easier to partner with them. It's easier also for them to work with the telcos, because now most of the telcos have opened up or provide an open API environment, which also enables them to work better with the telecoms operators. In terms of microbusinesses, as you said, are the backbones of African economies. So it is important to target them when planning financial inclusion programs. And the challenges to get them on board was the lack of awareness and also illiteracy issues, and lastly the cost of digitization for them. So you mentioned some examples whereby ABSA has partnered with Tigo and the software provider in order to provide a lending product, for instance, helping them to work on to finance their digitization process. Cryptocurrencies, a hype word, a hot topic, but it's obviously been a lot happening across Africa, but unfortunately we still have regulation not having caught up with the trends. There's an increased need for the regulators to be involved. And in terms of changing regulation, as you said as well, the markets have evolved. So we find that a lot of the players now, as you said, the bank is no longer just a bank, the telco is no longer just a telco. So one of the challenges is that most of the banks and also the telcos and the fintech players have to face a multiple regulator environment. So there's a need for more collaboration or more cohesion in order to make the regulatory environment not more manageable, but more adapted to the new digitized environment. Thank you very much for your time today, Abdi. We're now going to wait for our audience to ask for a few questions and answer. Thank you very much.
Thank you. Thank you very much, Ekla. Much appreciated.